Andrew Malcolm here, Mortgage HQ, and today we're going to go through the 10 questions you got to ask yourself before you buy an investment property. And there's so much information to cover, I'm going to have a little cheat sheet for myself. So 10 questions you should ask. Number 1, how will you fund your deposit? Now, if you're going to buy an investment property, you're going to need a deposit. And if it's your first property, you might get away with 10 to 20% if you're using a non-bank lender maybe, but otherwise you might be looking at 20 to 40%. So deposit, where is it going to come from? It might be from a joint venture partner, might be from your mum and dad, friends and family, might be from an existing property you already own or that one of them owns, they're going to top up. It might be some cash you've saved up, might be a caveat, like a second mortgage on somebody else's property, might be vendor finance from the person you're buying from. It might be a personal loan, it might be an asset loan, it might be from your KiwiSaver if it's your first property. You can see that funding your deposit, there's at least 10 different places that a deposit can come from, and that is just the surface level. So if you don't have savings in your bank account, don't let not having a deposit be a good reason why you wouldn't buy an investment property. How will you secure finance? That's question number 2. Now, securing finance is not just main bank lending. You've obviously got your big banks, you've got New Zealand banks, you've got your smaller banks, those are options. But also you've got non-bank lenders, which are specialist property investment lenders, of which there are dozens in New Zealand. Their interest rates are going to be a little bit higher, but they give you a lot more flexibility, which we'll come to later. Friends and family might also be a good source of financing an investment property. You might be able to get funding for an investment property and you don't even have to secure the investment property under that line of finance, and therefore you'll be able to use that property you're buying as security to buy another property. And I've done that before. Joint venture partners again, vendor security, and then you got to think about when you're financing an investment property, if you can finance it without securing it for that finance, then even better. Question number 3, how will I maximize my cash flow? Now, especially when interest rates are going up like they are, maximizing cash flow is going to be very important. So you want to be looking at investment properties and thinking about borders, around renting by the room. You want to be thinking about whether having a property manager makes sense or not, because that's going to impact your cash flow. And you're going to be thinking about minor dwellings. Any ways that you can increase the cash flow of the investment property is going to help with servicing the loan and help you with borrowing to buy again for another property. Question number 4, how are you going to get the best price? Now, in the market that we're in, mid 2022 at the moment, listings have skyrocketed, property prices are falling, and now we're in a situation where you potentially, this is a really good time to buy. When there's a lot of properties to choose from, it's a buyer's market. So how are you going to get the best price? Firstly, you want to make sure you got market knowledge. If you're buying in an area that you're not familiar with, then get yourself familiar. And if you're buying the first property you've seen, or you've only been looking for a couple of days, and you've got to be looking at lots of properties, and you want to keep your finger on the pulse regularly in the property market and be throwing lots of offers out on the table. There's no cost to making offers. You want to sign a sale and purchase agreement with a due diligence clause in there. There's no cost, and you can be looking at 500k properties and offering 400k. You can do that all day, every day, and something might stick. If you find a desperate seller, then you're putting yourself in a position to get a much better deal. Desperate sellers have to meet the market. So if you are the highest bidder on the day, that is a free market, and that is a great way for you to create some equity for yourself and get the right price. Question number 5, how will I time it right? Now, market timing is not as important as time in the market. You've heard that old adage, and to a certain extent I do believe that. I believe trying to predict the future 3, 6, 12, even 24, 36 months out is silly. It's a fool's game. Any day of the week, any time might be the low point in the market through the cycle. If you can buy, you should buy. Now, I'm not saying that you should buy at a silly price. I just think that if you can buy and you're approved and you want to buy an investment property, there's not really that many good reasons to wait. If you're waiting because of certain market commentators saying to wait, you've got to look at their property portfolio and understand, should you wait or not? If somebody has a lot of properties and a lot of success, they might not be as motivated to take action because they don't need to. If people don't have properties and they're not actually established investors, they're not good people to listen to. Make sure you choose your experts wisely. Number 6, What is best for me to buy? Now, this is a difficult question, and you should bring an open mind to this one, because a lot of people are negative on apartments, but when the market is down like it is right now, it can be especially down for apartments. And you can look in Auckland Central, Wellington Central, demand for those properties has dropped significantly. Prices are dropping and dropping and dropping. And if you're going to buy an apartment ever, the best time is when the market is dropping and bottoming out. When there's low buyer demand to buy apartments, that's when you're going to get the best deal. What is best for you to buy? You want to understand, apartments, single dwelling, multi-dwelling, cross lease, new builds, commercial, industrial, residential. There's lots of different ways you can look at property investing. You want to understand all of them broadly, then pick something that you're going to focus on and research that even more. The way to get a really good deal on apartments is to understand the apartment market. Number 7, what ownership structure suits? I think that it's really important that when you're going to buy an investment property, understand the repercussions of buying in the wrong tax and ownership structure, and that when you're contracting to get a property under contract, you want to make sure you understand the risks and obligations of putting your name to a deal in your own name versus in a company. With the government changing the rules all the time, it does make sense to understand from a tax and accounting perspective, a legal perspective, what makes sense based on your situation of what entity you should be looking to buy this property in. I really would recommend getting advice from an accountant or a lawyer or both before you start putting your name on something. Number 8, how long will I own it? Now, this is important for finance and for tax and ownership structures. I think that what a lot of people get held up on is they think that buy and hold is the way to wealth in property investing. And to a certain respect, it is, but buying and holding is not the only strategy. And what you may come to realize in time is that trading, flipping, renovating properties, even if it's your own occupied property, is a way to create extra equity and to create momentum. That if your skill set is renovations and you're going to buy a house to live in it, fix it up and sell it, it's a great way for you to get ahead in the property game. You want to be keeping some of the properties that you're doing that for, but you won't be able to keep all of them if you've got a hunger for equity buildup. How long will you own it is an important question, because if you're going to do a quick reno and the bank is not allowing you to finance it, you can still look at non-bank options, which are more expensive but allow you to keep doing more transactions. Number 9, where should I focus my time and energy and attention? That is the key thing that I think that a lot of investors get wrong, is they try and do it all themselves. The property management, the finance, the finding the property. You can use a mortgage advisor, you can use renovation and property management specialists, and you can dedicate all of your time to finding the right property. And if you're struggling to find the right property, maybe you want to start looking at buyer's agents. 10, 15, 20 grand on a buyer's agent might seem like a lot of money, but if they're helping you find properties that meet certain criteria that you've supplied them, and they're helping you get deals done, then it might actually really be a good use of money, especially when there's so many listings. Properties agents are going to be worth their weight in gold getting properties under contract at really, really good yields. Now, number 10, how will I buy? Now, this is whether you should buy at auction, negotiation, tender, or whether you should be looking at properties, going to visit them before you get them under contract, or whether you should get them under contract before you visit them. You need to understand these different sales and buying and sales methods, and try and figure out where is your strength. Like, if you are bold and you're willing to do the work up front, then auctions are a great place to find good property deals. You can get a steal where somebody has to sell something on that day, no matter what, might have only been on the market a couple of weeks, there's nobody else, you're the only person putting your hand up. Okay, yes, there is risk, but where there is risk, there is reward. On the other flip side of that is you can put out dozens of offers every month that are lowball offers, and they will be entertained by agents now, whereas a year or two ago they wouldn't have been entertained. You, from your computer at home, 1 o'clock in the morning, you can send out contracts with due diligence clause, make lots and lots of offers before you even consider visiting the property, get the property under contract, and then start doing more due diligence and potentially visiting the property and save yourself a lot of time there. So I think that the thing that doesn't work is when you try and do it all those different sales methods. You've got to, for a couple of weeks at least, pick a method that's going to work for you based on your strengths and your tendencies, and run with it. So this is some of the 10 questions to ask yourself before you invest in property. Mortgage HQ is happy to help with the finance side of things, especially happy to help with the educational side of things. But at the end of the day, you're going to be the one that says, yes, I'm going to buy, or no, I'm going to sit and wait and wait and wait. And don't wait too long is all I can say. Any questions, let us know below, and make sure you subscribe.
My favorite thing about the workshop is how simple it is. So language is really easy to understand, so anyone like with no property knowledge can understand what's going on.